Hi everyone, and it's great to be here. Again, I'm Jeanette Tier. I'm the research lead here at Crunchbase, and I've been at Crunchbase for more than 15 years. I worked a lot with our data, and then from 2015, I started reporting from our venture data, looking at funding to female founders and then broad industry trends. So I've been doing this for a long time. So it's great to be here. We have some new products coming out of Crunchbase, and it's good to look back at 2025, and then we have some amazing speakers to come talk about what we expect in 2026. Here they are. We have Tim Tully, we have Janelle Teng, and Itai Sagi. So welcome to our speakers, and they'll be joining us in a minute. I'm just going to go through a few of our findings for 2025. There was a huge shift in what happened in venture in 2025, and I think it's worth, you hear a lot out there in the industry, but I think it's worth going through the data to really see what we saw happening in our data set. So this is venture funding over more than a decade from 2011. And I think this is global venture. It's everything from seed, early stage, which is largely Series A and B, all the way through to late stage investing, as well as private equity and corporate venture into venture-backed startups. So that's the ecosystem that you're seeing here. And I think what's interesting about the data is what it shows from 2011 is how much the startup ecosystem has grown, even though year over year it doesn't necessarily shift up. Over time, you can see the venture ecosystem has grown, and we're going to dive into some of the numbers behind that. I think what you also see is in 2020 to 2021, a massive jump in venture, unprecedented, and I think the market is still dealing with the after effects of all that money going into 2021 and a very slow exit market since then. So a lot of that money is still locked in private companies. And then fast forward to 2025, I think what's interesting is this year, 3 years sort of into this AI wave, we've seen venture increase quite significantly, 30% up year over year. And it's the third largest year for venture funding overall time. And actually for the US, it's the second largest. So we've definitely seen an uptick in funding going into private companies in 2025. The 2 years before that were around the 300 billion mark, was sort of flat, but I think higher nonetheless because of AI. So it's going to be interesting to think about whether 2026 is going to see more of a liftoff than we saw this year. If you look at the AI market, I think what's interesting here is in 2025, it grew, probably no surprise here. And what we saw is in 2024, AI was around a third of all global venture funding. In 2025, it was 50%. And I think certainly into 2026, we're going to see that proportion grow. And this is unprecedented. We've never had a sector represent 50% of global funding. And I think that's because AI is weaving through many, many sectors. Also, in just how we tag AI companies, it's worth noting it's everything from the foundation model companies, all of the AI infrastructure companies, the semiconductor, the data provisioning companies, all the way through to the application layer. And the companies that are tagged as AI in the application layer are companies who are AI native or companies where AI is central to what they're offering in their product offering today. If we look at the foundation model companies, they raised a lot more, or the frontier model companies, a lot more in 2025. So that's up 180% year over year. So a lot of funding, 41% of this AI funding went into the foundation model companies. So the majority obviously still went into everything outside of that, which could have been in the infrastructure layer or could have been on the application layer. This is just looking specifically at OpenAI and Anthropic, who've raised unprecedented funding rounds in 2025. So OpenAI was up more than 6 times what it raised in 2024, and Anthropic more than 3 times. It's going to be interesting to see if those numbers continue to tilt up into 2026 or whether a lot of these circular deals to fund compute are going to keep happening and allow these companies not to have to raise tens of billions in the years ahead. Another trend that we did see in our data, which I think is interesting, is the concentration of capital. So this is since 2014, and what you'll see here is the rounds that were 500 million or more represented 34% of global venture, so a far higher proportion than in any previous year. I also did look at rounds 100 million and above, and in 2021, which was that peak year, that was around 60%. If you look at 100 million above, it's also around 60% this year. So certainly a much greater flow of money into those very large rounds, which I think you would expect given all the highlights we've seen, all the big rounds that were announced in 2025. I think another shift that we've seen that did surprise me is, these frontier labs, it's an equalizing technology. Everyone can get access to these frontier labs. And so one would expect that, there are strong startup ecosystems around the globe that have been growing, and you would expect that to lift and elevate everyone. However, what we've seen in our data is, 2010 to 2014, US venture dominated global venture, far north of 50%. We saw from 2015 all the way through to 2023, the US market still the dominant market, but represented less than 50%, in some years even down to 41%. I think that was due to the growth of venture largely into the Asian market and into China and India. But what's interesting is we've seen a shift since 2024 back to the US becoming this dominant ecosystem, and I'm sure we'll talk about it in our chat with our experts. But last year, 64% of global venture went into the US market. Again, quite a stunning number and not something I would have expected. We also saw the draw to the San Francisco Bay Area, a lot of energy around the San Francisco Bay Area. I'm based here in Palo Alto. And so I see this. I'm at a lot of events in the city in San Francisco. And what we saw is 57% of US funding went to the Bay Area this year. Obviously, there are other ecosystems in the US that are also raising large amounts of money, but certainly dominant. The Bay Area has definitely seen a surge. Here are some of our headlines, which talks to some of the themes that I've just chatted through. Final two slides just on our outlook is we have seen a pickup in IPO and M&A in 2025. I think it's much needed. You'll see in 2021, 123 IPOs, 100 SPACs, north of $1 billion across the US and European markets. Those numbers pretty much came down significantly in 2022, still a bit of SPAC activity, which was an overhang from 2020 and 2021. But largely the IPO markets have been incredibly slow, 22 through to 2024. In 2025, we're seeing them pick up. So there were 27 IPOs north of $1 billion in 2025. So kind of in line with what we saw before 2021. And when I talk to analysts, they say we're looking for the IPO markets to come back to not the 2021 year, but certainly to that sort of pre-COVID period is what the market would like to see. We'll look at the numbers behind this as well. And then on the M&A front, I think what's interesting is this is the highest count of billion-dollar exits that we've seen in our data, in Crunchbase data over all time. So certainly M&A has made a big comeback in 2025, and we'll definitely discuss that in the panel. Finally, this is just by the numbers, the exit prices. And so what we have seen again in 2025, the highest count in terms of billion-dollar exits across Europe and the US, but we've also seen the highest amount, even higher than 2021 M&A. So certainly M&A has been off the charts in comparison to any other year. And then on the IPO front, the 144 billion represents those IPOs at their listing price. So not the first day lift up, but the listing price. Again, we're seeing that amount above 2018, but certainly still below what we saw in 2019 and 2020. So I think the IPO markets are not really back. And I think there are lots of questions as to whether we'll see that happen in 2026. So this is time for a poll. I think Sally, who's organizing, is going to run the poll. So what we've seen is that, this is a lot of the data that I spend time with in Crunchbase. There's lots of different angles on this data. There's lots of ways in which you can pull the data from our APIs and also within our Pro products. But before we move to the next section, I'd love to see who's interested in finding out a little bit more about Crunchbase data, diving into how private market data can make your products more actionable for this year. So please do reach out. And thank you for your interest. We appreciate that. You can have a few more minutes. And just while you're doing that, I think one other thing to let you all know is that we are participating in the HumanX conference. So Crunchbase is going to be there in force in April. You have a 50% off code here, which you can get to get a ticket for HumanX if you're interested in joining us there. And then we also partnered with HumanX to write the AI report based on who's attending the conference, but also the bigger themes in AI. So feel free to download this report right here. I think there's lots of interesting insights and some more of a deeper dive into some of the sectors where we're seeing growth on the venture funding side in 2025. Okay. And now finally, I'm going to invite our panelists onto the stage. We have Tim Tully, a partner at Menlo Ventures, Janelle Teng, partner at Bessemer Venture Partners, and Itai Sagi, who's a senior advisor at Allied Advisors. So welcome all. It's great to have you here.
Thank you.
Happy to be here.
Yes. So to kick off, so I'm sure there was a lot to mull over in that presentation on what we're seeing through the Crunchbase data. And as I say, I always love speaking to people because I get a sense of what you're seeing, and then I pull the data to see if it matches what's happening or if something very, very different is happening. So to kick off, what I'd like to do is just get each of you to introduce yourselves so that we can ground the discussion and understand sort of where you're coming from and your experience in the market. So Tim, would you like to kick off?
Hi, Junaid. I'm happy to be here. I'm Tim Tully. I'm a partner at Menlo Ventures. I've been there about almost 5 years or so, primarily focused on infrastructure and AI, but I guess everyone is doing AI these days, but definitely a focus area. In my past life, I was an operator. I was CTO at Splunk. I ran the product and engineering team there for many years and still coding all the time.
That's great. Itai, would you like to tell us about yourself and your background?
Yeah, sure. Very excited to be here, and thank you for inviting me and see people in person after writing for Crunchbase for a few years. So my name is Itai Sagi. I'm 44, American Israeli. I work in M&A and a former entrepreneur. Started in biotech engineering, got my MBA at ES in Barcelona, moved to venture capital, tech entrepreneurship, led a few companies, some shut down, some were acquired. Then past 8 years, been working in sell-side M&A in mid-market, worked in about 50 successful deals, and also teach economics and unit economics and entrepreneurship.
Wonderful. So different perspective. And Janelle,
Yeah.
where are you investing?
Yeah, thanks, Janae. Hi, everyone. I'm Janelle. I'm a partner here at Bessemer Venture Partners. Have been with the firm coming on 6 years now. I focus on early stage, so typically my first check-in is a seed or Series A, and work very closely with highly technical founders. So the worlds I cover tend to be the domains of data infrastructure, AI infrastructure, defense tech, and deep tech. And prior to becoming a VC, I was on the product side at a startup called Relate IQ. So have spent a lot of my career in the applied AI world, and Relate was acquired by Salesforce.
Got it. Okay, so that's great. So I'd love to kick off by understanding, and Tim, I'm going to ask you to step in first, is what surprised you about 2025 numbers? Was there anything in there where you weren't expecting it in 2025 and then the market kind of evolved?
Yeah, I think the thing that surprised me the most was what you highlighted in the report was primarily around the M&A activity. I didn't expect there to be so much coming out of 24. It was, things were pretty slow. It was hard to get companies acquired or merged. Just seeing that pick up towards the back half of 25 was pretty fantastic. We had a number of companies in our portfolio get acquired for great numbers. But seeing that accelerate coming out of the last administration was really exciting. I think the other thing, and then this is very prescient from the news in the last few days, you're starting to see secondary tender offers become pretty popular within companies as leaders of those respective companies look for ways to pay their employees. So and compete with offers from larger companies. So seeing that M&A activity, seeing the sort of way that folks are getting compensated evolve over time is pretty surprising to me.
Got it. And do you find your firm that was much needed liquidity for your firm, or?
I wouldn't say it was much needed. I mean, we're well positioned. I think it's just more, you want to return dollars to your LPs, and so that's always a positive event. But I wouldn't say it was necessary. I mean, we're always pleased to see an outcome from one of our companies, but not needed per se.
Got it. And Itai, what surprised you about 2025? Also M&A or some other thoughts?
Well, first of all, regarding the data you've presented, I see AI not really as a different sector to analyze. It's more of something that breathed, new life into a lot of industries, from healthcare and agriculture, education, defense, cyber, everything. So, I think it's going to, boost a lot of these industries as a foundational layer. not really is a new industry. That's one thing. And what surprised me was actually the acqui-hires that we've seen for more than $100 million just for the team itself. So that just shows there's a lot of talent scarcity out there. Um, but all in all, I think it was a very good year for M&A, both for the multi-billion-dollar deals and also for the mid-market deals I'm working on mostly.
Yeah. And some of those acqui-hires, which were structured as investments, do not show up in that M&A data. So that's strictly the M&A. So probably even higher over
Yeah.
2024 and into 2025. Janelle, what surprised you?
Yeah, I think your data set's super comprehensive, and as you articulated, we did see increasing concentration in kind of a handful of names, especially in AI, and then even the rounds are now getting concentrated in these mega rounds. So dollars are getting concentrated in that way. And I think what surprised me the most is that this concept of power law is very well understood in the venture ecosystem, where there's tends to be an extreme distribution, where a handful of outliers, if you will, accounts for a big impact. But the surprising thing is the power law effect, I think, in this AI age is getting even more deepened and extreme. So the said another way, I think the biggest companies are now getting bigger. And you presented kind of the private market data, and we saw this also in the public market, where we saw a lot of the gains for the AI beneficiaries flow into companies like the big tech companies, the hyperscalers, and what that's led to now is that a small handful of S&P 500 companies, namely these big tech companies, now account for close to 40% of the indices total market cap, which these levels are unprecedented, in history. So really exciting to see kind of this power law deepening, and it just means, at least for us with VCs, if you're chasing startups, the prize could be much bigger than historical kind of times.
Yeah. So Janelle, just over back to you is given that you're seeing these sort of unprecedented numbers on the public market side, and that's sort of mirrored in the private markets. And I think this conversation is going to continue throughout this year because of the amount of money going into capital expenditure, the amount of money going into these very large private companies. So do you think we are in a bubble? How do you see the kind of whole bubble question?
Yeah, I think it's multifaceted. So how I would try to split up and add some nuance to the discussion is to look at this bubble debate across three vectors. In the public markets, the vector that is dominated is the bubble debate around investment into AI infrastructure. And just to put it simply, these large big tech companies are now investing truly unprecedented amounts of dollars into things like data centers and chips in anticipation that AI demand will catch up to this capacity, or that the capacity will kind of meet the growing demand. And that has put some folks on edge, whether we are overbuilding or there could be a glut in the future if AI doesn't meet its promise. I think to answer that, what I would look at is a second vector, which is around AI adoption, and especially in the enterprise, which is where I focus. I focus less on consumer, and looking at where AI adoption is today in the enterprise. I would say we're not necessarily in a bubble, although the viewpoints there are also very mixed. Like there are reports saying that AI adoption, if you look at subscriptions at the enterprise, might be slowing, but other people are putting out conflicting reports to the contrary. And I would say, like, my view there is that AI agents in particular will account for a large amount of the future of work. And if you believe in that reality where AI is not just a co-pilot as an augmenting tool, where AI actually takes over workflows and does actual work that could be done by services or labor, that there I see a huge amount of potential for AI adoption. And we're certainly, in my view, not in a bubble in that vector. And the last vector, just quickly, is on valuations, especially in the private markets. I do think we are running a little bit hot on that front. And I just say that where we are seeing these kind of large seed rounds already, valued close to $1 billion. And if you look at it from that lens, like how many multi-billion-dollar or decacorns can there be in this age? I think there certainly will be a few, but it may not support some of the quite high valuations, especially at the early stages. So I do think from a demand and supply valuation perspective, it is running a little bit hot on that front.
Got it. Itai, do you think we're in a bubble?
Yeah. So I can't blame entrepreneurs for accepting high valuations, if it's thrown at them, but I think retrospectively, it's a bad decision. So you're looking at companies in 21 that raised in very high valuations. I meet them today, 5 years later, either going bankrupt or having to do down rounds. So in that sense, as Janelle said, there is a bubble because there is a disconnect between the commercial traction and the valuation. However, there are, category creators that do have real modes that will justify these outcomes. But a lot of AI applications, with shallow defensibility, will probably not bring good results.
Okay. And Tim, what do you think? Are we in a bubble? Are you on the fence? Do you think yes, no?
Yeah, I'm not on the fence. I definitely think we're not in the bubble yet. At least I think it's possible that it's on the horizon. But what I do is I simply look towards companies in our own portfolio, especially at the application layer, that are doing really, really well. They're selling tons of software, high gross margins, high revenue. And the surprising thing to me is that they're selling software in sectors that I honestly would have guessed would have been the last to adopt AI quickly. The ones that come to mind to me are legal AI. I mean, I always thought, lawyers and such would be the last to adopt leading edge software, especially if it has a heavy AI tint to it. So I was surprised by that. I think of like medical scribes, anything in healthcare, all of those tend to be sort of slower adopters of technology. And so just seeing them just adopt AI this quickly and buy and transact that software tells me that, at least for now, I don't think we're in a bubble, but that could change over time.
Yeah. And it's interesting, our numbers show funding is up 30%. So that is a big uptick. As I say, the third largest, but the US it's up 46%. So the numbers are definitely trending up. I think one of the things that I noticed in in 2021, I was covering venture and we saw a huge uptick in late stage. But what we also saw in 2021, I spoke to the, seed investors and early investors, and everyone was throwing money, investing at a huge pace, doing much bigger rounds than they'd previously done. And when you talk to anyone, they would say, well, I have to invest now because in 3 months or 6 months, this will be valued up and I'll miss the opportunity. And so you did get the sense that everyone sort of piled into the market at an unprecedented pace. And that kind of shows up in the numbers. And then when you look at 2025, yes, funding is up. But when I speak to investors, it's far more concentrated. They're being far more, I wouldn't say careful is the right word, but they're being far more thoughtful about where they place their dollars. And the companies that they are betting on are the ones that they think they're going to win. And so I think it's a very different investment climate to what I saw in 2021, or a very, very different investment outlook. But certainly there is a big shift happening around AI. I was just noticing that ServiceNow and Salesforce stock was down. IBM was up because of AI. Meta was up because of advertising earnings. So you are seeing the shift in the private markets. AI is at the center, but you're also seeing that begin to impact some of the SaaS companies in the public markets as well. So I'd love to understand from all of you, leading into this and this sort of AI bubble story is, I think, one of the headlines that really hit in 2025, and this was months ago now. I feel like this industry is shifting every 3 to 6 months. I hear very different use cases of where AI is really hitting or making a mark. But this MIT study in August 2025 stated that 5% of AI projects succeed, which seems to be a very, very low statistic given the promise of AI. So I'm just wondering, and I'd love to kick off maybe with you, Janelle, on why you think, what you think of that stat. Is that real? It sort of struck a nerve. So I think for a lot of people that made sense. So, what do we make of this? Because it suggests that there's a very long road for AI adoption at this point.
I think, Janae, as you said, the market and landscape is evolving very quickly. And I think when that article came out, I would say that the reliability of AI deployments in the enterprise was maybe not 100%. So said another way, there could be things like hallucination in kind of the base models, or the infrastructure was not set up to absorb context to support the AI model. I think over the last 12 months, we've just seen that truly progress in leaps and bounds. And we see progression in just the base improvements in the foundation models. 12 months ago, LLMs couldn't reason necessarily, and now we do have a new class of models that can do that. I'm very bullish in a new paradigm called continual learning, where the base model itself should be able to just retain context and not forget kind of skills or knowledge that is known before. And I think there's a new paradigm coming in the base foundation model layer. So that has improved. And I would also say that infrastructure surrounding these enterprise deployments has also improved in leaps and bounds. And by infrastructure, I mean things like your knowledge graph, your reinforcement learning systems, your evaluations and benchmarks, all of those tools. A huge progress has been made over the last 12 months. So I think as the reliability of these AI systems, not just the LLM as the primitive, improves, we'll see that stat go up, and quite bullish on that front, especially with infrastructure leading the charge there.
Got it. Itay, do you agree?
I mean, I agree. In the sense, it wasn't surprising. I'm not sure if it's 5% or more, but there is typically, when there's a shiny new technology, there's a massive gap between the vision and then the deployable reality. We've seen it, with autonomous vehicles, for example. It took more than anticipated. I think it's going to be much faster with AI, of course, but in the longer run, when AI does get more reliable and more secure, by the way, I think it'll go through the same adoption rate of, over application, disappointment, and then some correction that will take place. But I do think it's going to be heavily adopted.
Yeah. And do you think you're going to see that this year, or is this 2 to 3 years out?
I think there are some challenges to solve before that happens, and it could be a year or two or three. I don't know. Things are moving so fast, but to me, the main challenges are around cost and around security.
Okay. Tim, what's your take? I know that Menlo put out a big AI report, which I thought was very insightful.
Yeah, I mean, you sort of hit what I was going to touch on, which is, we put out an entire report almost that refutes the MIT study entirely. I mean, everything from, adoption levels of software across vertical, departmental, and horizontal AI, real revenue and traction within companies, as I mentioned in the previous answer, productivity gains at scale. And then I just think about, again, I go back to what's happening in my own portfolio companies that I work closely with. I was just in a board meeting with one of my companies yesterday, and they were talking about all the productivity gains they were making in the go-to-market side. And, that software was both being purchased by the go-to-market folks, but also being written by the go-to-market folks. They actually had, individual account execs in the team using Claude Code to develop their own tools to help them do their job. And so, there is this build versus buy sort of paradigm at work as well, but I think folks are having success on both sides of that ledger.
Yeah. I hear a lot more on the buy versus build is where we're seeing success, but that's interesting. I think that one question that I'd love to know and to sort of dive deeper is, Tim, you talked about, and we're seeing this in our data, that legal, is when we look at funding to the legal sector, most of that is AI funding. When we look at coding and automating coding, most of that is in AI. We see other sectors like fintech and healthcare where funding is not dominant. AI related companies are not dominant. Certainly they're beginning to use AI, or AI might be introduced, but it's certainly not saturated those sectors. So I'd love to understand from both Janelle and Tim, you as the investors on this panel, like, are there sectors today where it's too late to invest? These are proven and you're looking beyond, or is everything still up for grabs in spaces like coding, legal? As you say, you would not have expected these sectors to kind of be the leading ones. Also in the medical scribe space, are those opportunities now in the rear window? And as an investor, you have to look for different markets to invest in. Janelle, do you want to kick off?
Yeah, I would say all vertical. I think AI, back to Itay's comment when we kicked off, AI is such a powerful just paradigm shift, and think of it as a platform shift, just as the internet was a platform shift, mobile was a platform shift. I do think it's an earthquake that will rock every vertical. And we, in fact, yes, have made investments in all of these verticals. So for instance, Medical Scribe, we invested in a company at the seed stage, a bridge that has now grown into a growth stage company. Within legal, we have multiple investments. So we have a company called Even Up in the PI space, and then we also have Legora in the more horizontal space within legal. We have several in accounting. We have several across defense as well. And so I think every vertical is up for grabs. It's still very, very early days, and and maybe this ties back to the MIT study, if you will. These enterprise adoptions are just getting started. So I think it's the playing field is wide open, and would encourage anyone to look at, I would say, the more legacy, the vertical, actually, it's better for a technological disruption to take
Yeah.
over.
Yeah.
Yeah, I think Janelle nailed that answer. I think there's still opportunity to sort of fill in the gaps potentially within each of those verticals. And the ones that you mentioned, I would sort of add that, the observation I have on that is those are highly structured data that folks are dealing with, right? Code is very similar to legal in a lot of ways, right? You're looking at very structured text output. Same thing in healthcare as well. So I think anywhere where you have that phenomenon happening, there's an opportunity still at play. And I think the other thing is that over time, agentic execution is going to get better and better, and they're going to be able to tie together potentially, spot solutions across each of these verticals together into a more cohesive solution over time. So I think there's an opportunity there as well.
Yeah. So in each of these markets, what I'm hearing is, it's still early. Companies can come out. And I think there's definitely been this shift. When I started reporting on this, there was a big question about whether incumbent companies were going to be taking the lead or whether it was these AI native companies. And incumbent companies seem to have so much advantage, which is customers installed, customers using their products, trusting them, and then you can add in this AI component and they can keep growing. And certainly there is an advantage, and we will see some incumbents do that. But we're also seeing these AI native companies, as you say, come out of nowhere, take a market lock, be able to grow very, very quickly. And so I think definitely the market, from what I'm seeing, has shifted to the excitement around these AI native companies coming in and maybe being able to do things at a slightly lower price point in order to shift the market towards themselves. So I'd love to understand from each of you on the panel, and Itai, maybe you can kick off, is where are you seeing, what's going to be different about 2026? Where are we going to see ROI, given these models are developing so quickly? And Tim, I know you as a firm are very close to Anthropic. You invested quite early and have partnered with them on working on a fund and making investments. So what's going to be, I think some of these use cases that we've seen, as I say, around coding, I hear more and more companies I speak to, the big companies are beginning to use this and seeing real utility, but everyone's always focused on what next? What else are you going to give me? So what's going to define 2026? What's going to be exciting about 2026?
So I'll give one prediction and then one wishful thinking, if I may. So the prediction is is going to be a focus, I think, around the upper side of the value chain of energy and compute. And I think if we see companies that can, increase efficiency by a factor like of 10 or 100, in compute and in storage and so on, I think that'll be a big sector. As Janelle said, these hyperscalers are spending $700 million a day on CapEx, and that's a big opportunity, even if you make a small change there. But I think it's going to be a meaningful change there, and I've seen companies already doing that. And until that happens, I think many AI applications just won't have a viable business model because of the high costs. So that's one. And then on the wishful thinking side, I think the bigger unsolved problem with AI is digital integrity. So, at scale, misinformation just erodes the value of the internet itself. So if we can find a way to trust AI content and have some accountability with these agentic AI and link them to real identities and distinguish synthetic data from human, if we can't do that, the AI will just undermine the very platform it depends on. So I think that's the second topic we have to tackle. Again, maybe it's wishful thinking because I want the internet to be better, but I hope that's something people will focus on too.
Yeah.
Yeah.
Tim, what do you see for AI in 2026? What are you expecting? What would you like to see?
Yeah, I mean, I think fundamentally the thing I'm most curious about is the way that software engineering is going to evolve in 2026. Like, prior to becoming an investor, I was really a software engineer for a couple of decades with hands on keyboard writing, lines of code at a time. It's just like we sort of all grew up doing. And that's totally out the window now. Like when I talk to companies these days, they're telling me that 85, 90% of the code that they're writing and within the organization is written by AI at this point. And so I think that the practice of software engineering is changing. I think how teams work within software engineering is evolving quickly. I think you're going to see agents, long-running agents in particular, run for hours, if not days, to do that. I mean, my daily driver web browser, for example, is something that I like one-shotted myself one time using Claude Code, and like that's the browser I use. I kind of don't use Chrome anymore because it does some things that I want. So these mechanisms are getting just more and more powerful over time. And I think as software engineering changes, not only is the practice evolving, but the underlying architectures are changing as well. Like what used to be CRUD operations against a database is suddenly becoming agentic execution very heavily. People are throwing out REST web services and moving to agents. And so I find that all very exciting. And so as it impacts me as an investor, as I start to think about what is the underlying infrastructure for agents going to look like in 2026, right? Are we going to have some Kubernetes like infrastructure that agents have to run on to execute? And I'm looking for memory, I'm looking for compute, I'm looking for storage, all of that in support of agentic execution in 2026.
Yeah. And are you seeing new companies come out in this sort of code writing space that you're investing in, or are you're looking?
I'm looking. Nothing. I mean, we're quite excited by our Anthropic and hence Claude Code investment, as you said, and definitely don't want to do anything that's like overly competitive with that, but definitely looking.
Yeah. Yeah. Janelle, what are you wanting to see in 2026? What are you expecting?
I think, and I speak more from a technical and infrastructure point of view. I think on AI infrastructure itself, very excited for 2026, where I think it'll be the year we see a breakthrough in the paradigm that I talked about, continual learning, which just means that we'll have models that can now inherently retain knowledge, have the ability to not forget previous skills and tasks, and that will be baked into either the model architecture itself, or I'm also seeing a lot of teams try to bake this kind of infinite context window into parts of the AI system, whether it's in the caching layer or kind of working on the attention mechanism to inject that in. So I think from a highly technical research standpoint, I think we'll see a pretty I would hope to see a breakthrough there. And then, we talked a lot about, what's been built out in the current AI wave. And I think a lot of it has focused on LLM, text-based paradigms. And as Tim mentioned, I think the unstructured side, whether it's multimodal or physical intelligence and physical AI, I am very excited about the innovations that we're seeing in that space, which is probably the next frontier, where we're seeing AI now deployed on hardware, on device, in the real world. So less about the enterprise deployment of LLMs, but actual robotics embodiment of AI. I think that's really the next frontier, and really excited to be working with companies in that space where they're building robotic brains or new data paradigms or even inference for robotics. Those are all very exciting kind of frontiers that I see founders pushing
Yeah.
in.
It's interesting because in our data, we've seen a huge influx in 2025 of capital into robotics. And I was somewhat surprised because speaking to investors, they said the humanoid moment hasn't quite happened. We're not quite there. We're not sure who we're going to invest in, but nonetheless, a huge amount has gone into robotics, partly for industries, industrial automation, but also in this humanoid space. I think a couple of questions, Tim. There was a question for you around the data center capacity and whether there is enough capacity for these foundation model companies or for these hyperscalers. So I don't know if you have a thought on that quickly.
Yeah, I mean, the answer is certainly no. I have a couple of companies, even in my portfolio that I work with every day, they're looking for more capacity. And their biggest question right now is, are they more of a software company, or are they becoming a hardware company because they have to rack up a bunch of machines and find spaces for them? And they're asking me questions about how to move from air cooling to liquid cooling. And so like, there's certainly a ton of demand for this. So I think that it's an underserved market still. And as you think about how quickly the world is moving to using AI for almost everything, I mean, my kids last night asked me for subscriptions to both OpenAI and Claude at the same time, which I was sort of blown away by given their
Both.
age, because they're like 5 and 4. So like seeing like that level of early adoption at that age is perhaps sad on one side, but also helps me sort of understand where things are at and contextualize them. So I think it's an underserved market still.
Yeah. Janelle, I'm going to throw you a question which I'm seeing from the audience, which is just around the job market and concerns about employment and what AI is doing. Especially I'm seeing it I have kids in college, and I'm seeing amongst their friends it seems to be a lot harder to get your first job. So any thoughts on the impact on the job market?
Yeah, I think this wave of AI is so fascinating because it's automating knowledge worker jobs or white collar jobs versus I think in previous waves people thought that AI would not be able to do creative things or things that impact kind of higher order tasks. What I think will happen is that I'm a big believer that AI agents will start to absorb full workflows in the future. But I think what that happens to labor is that actually frees up labor to even go one step above that to even more higher level tasks. So, for example, if you're a coder, you probably now your job is not fixing kind of low level bugs or messing around with backend infrastructure or setting up a website. You'll be able to be elevated to the next step where you can inject even more creativity into your job. So, for instance, working on new high level features, working on creativity and style versus just the mundane task. So that's coding is just one example, but I think yes, as we talked about, engineers are seeing a huge change in their workflows and the way they do work. But I think AI is not just going to be a co-pilot, but I think it will start to abstract away kind of the tedium of mundane tasks and allow human engineers, labor to really focus on kind of higher value, more creative tasks.
Okay. So we're getting to time. I do want to thank our panelists. Before I do, I have one final question, and I'm going to kick it over to you, Itai, first, which is, what is your boldest prediction for 2026 or 5 years out with AI?
So, as I mentioned, I do think it will take over. And one thing that also Tim kind of alluded to is that there will be a fight between enterprise software and then self-built software. So if vibe coding gets to such a level, as a high level, it might render all the software, the enterprise software, redundant actually. So, one prediction is that there will be no enterprise software anymore, and it will all be just vibe coding at the enterprise level. So that's one thing that could happen. And again, the second thing I wish will happen is that we'll have a better, more reliable internet where we can distinguish between AI and non-AI, because I think that's important to bring humanity back to the internet. So hopefully we'll be there as well.
Got it. Janelle, what's your boldest prediction, either a year out or 5 years out?
Yeah, no, Tay's one is really bold. I really like that. I would say mine is that, in every technological paradigm shift, there tends to be kind of a battle for leadership. So, we saw that in like the browser wars, we had mobile wars, we had cloud wars most recently, and now we're in the midst of the LLM wars, if you will, with all these large foundation model companies really making their mark in the ecosystem. I think my kind of boldest prediction is that I think we will see a new kind of AI wars, which will be in the physical AI space. And I think that war will actually be bigger than the LLM competition. And so I think, what I would say, everyone hold on to their horses. Like we're in for I think a really exciting ride once that wave hits. But I think we're pretty close, whether it's in 2026 or over the next 5 years, we'll see a quite fierce competition on the physical AI side where more money, more talent will be going into that wave, beyond what we've seen in the LLM wave.
Yeah. And have you made investments in that sector yet?
We have, yes, and we've been investing all across the stack. So not just in foundation models, but also in data, hardware as well, and across different verticals. So not, with industrial manufacturing, there are a ton of verticals that can kind of look at across defense, automotive. And so we are excited all across the stack. It doesn't need to be software only and certainly not hardware only.
Yeah. And Janelle, you just answered a question from the audience, which is what's the next milestone in model development? So thank you on that. So Tim, what is your bold prediction? A year out, 5 years out?
I'm reluctant to touch 5 years out. I mean, things are just progressing too quickly, so I'm not going to touch that one. But I think for this year, I go back to what I was talking about with agents. I think agents will handle the majority of sort of what we used to think as being routine professional work for so-called knowledge workers. And I think what doing your job fundamentally means is going to change by the end of the year. And so, I think you'll spend less time executing, so-called tasks and doing things like writing reports and scheduling meetings and, managing emails and writing presentations, and more time sort of directing agents and how you want them to behave and do work on your behalf. So I don't think it's about AI replacing jobs necessarily, but more about changing how individuals manage personal AI systems that sort of magnify their own AI productivity.
And that's coming in 2026.
Oh, I think so. If it hasn't already started today, like I think what I'm trying to say is by the end of the year, I think that adoption will just, yeah, we'll be there.
With agents. Okay, well, thank you to our panelists. Thank you, Itai. Thank you, Tim. And thank you, Janelle, for joining. This was great. And it's lovely to have you all on for Crunchbase Live. And thanks to our audience for joining us as well. We appreciate it. And more to come.
Thank you.
Thank you.
Thank you.